I'm reminded of the Fed's two mandates, full employment and price stability. It seems like the Fed has accomplished both, so why aren't they cheering these days?
Well, we'll see what Jay Powell has to say later on this afternoon from Atlanta. He has been very pleased, actually, with the job market. That has been the shining star, as the last segment just illuminated. And the Fed's own unemployment rate forecast for 2019 is for the unemployment rate to slip to 3.5%, which is obviously an improvement from what we saw in November, 3.7%. I would remind you, Dom, that last month was 3.67% unrounded. So there's a good chance that we could actually see a 3.6 handle this morning at 8:30 when those numbers hit the wires.
So Danielle, as we talk about the overall economic picture, jobs have, like you said, been the shining point of this economy. Is it expected that this can continue into this year, given the kinds of gains that we saw over the course of the past 12 months?
Well, you know, it's interesting from where I sit, where we're mourning the loss of Herb Kelleher. In Dallas. Dallas's manufacturing survey was the only one of the regional Fed surveys, as weak as they were across the board, to actually show a decline in employment. And that was echoed in the big ISM report that came out yesterday morning that showed a 6-month low in employment gains. So there is some concern. A Conference Board CEO survey that hit the wires yesterday showed that 54% of CEOs, who I would remind you are in charge of hiring and firing, see economic deterioration in the next 6 months. So I do have some concerns. Again, the two sectors that were pointed out, manufacturing and construction, I do have some concerns going forward that we are going to see some weakness, especially given what we're starting to see out of some of the softer indicators, some of the survey data.
So if we are seeing some of that confidence erode, there has not been yet a reconciliation between that soft sentiment data versus the hard economic data that we've seen. In your mind, are the conditions there to see a recession anytime soon, perhaps even in 2019?
You know, I really do think, especially given the sudden stop that we saw. In fact, that word was used by one of the companies that was surveyed by the ISM yesterday, that they saw demand hit a sudden stop. Those are big words. The decline that we saw in new orders, I am worried that we're going to see a supply cliff, that there was a lot of panic buying ahead of the potential increase in tariffs that were not imposed as of the 1st of January, and that there's not going to be much in the way of follow-through. 75% of the last GDP report that we saw was inventory build. We know that these things are not sustainable. So I am concerned about what demand is going to look like going into the beginning of 2019. And all I'm doing is echoing, again, the CEOs and the CFOs, those who occupy the C-suite, who, again, they're in charge of making hiring and firing decisions. So, yes, Dom, I am concerned.
Danielle, we've got 3 Federal Reserve current or past chair people getting together on a panel today. Do you expect anything fireworks-wise out of that discussion between Jay Powell, Janet Yellen, and Ben Bernanke?
You know, I almost think it's a situation where good news could potentially be bad. The market is desperate. Look, 16 days ago, we heard Jay Powell be very hawkish, very adamant, take a strong line about that balance sheet, the balance sheet that was blown up by Bernanke, by Yellen. So it will be interesting to see if he throws the doves a bone and makes allusions to the fact that there has been softening and takes a harder line in saying, you know what, we're truly data dependent. And I think that that's what markets are looking for. This is non-farm payroll Friday. We would normally see futures flat as a pancake right now, and they're up markedly. I think that markets are anticipating a bit of a dovish tilt off of the podium today out of Jay Powell when his speech hits the wires shortly after 1 o'clock Eastern.